U.S. production has surged to a record 12 million barrels a day, but less than 5% of that is heavy oil. The sanctions have hamstrung refineries in the United States, as many giant Gulf Coast facilities need heavier oil to produce high-margin refined products like diesel and jet fuel. Heavy crude accounts for nearly two-thirds of U.S. oil imports. Of that, Venezuela's oil accounted for 10% of heavy crude imports in 2018 and about 13% in 2017, according to U.S. Energy Department figures. "We're buying more Mars for the current time," said Marathon Petroleum Corp Chief Executive Gary Heminger. Marathon, one of the nation's largest refiners, was not a major importer of Venezuelan crude. "Since we're exporting so much in the light sweet crude markets, you're going to have to bring in more medium sours." Shell operates the most Gulf platforms and BP has the highest volume of output from the region, according to figures provided by the companies. Representatives from the companies would not explicitly link the recent boost in sales of offshore crude to Venezuela's sanctions, though they did acknowledge the market's interest. Production in the Gulf of Mexico rose to a record 1.7 million barrels a day in 2018, and is expected to exceed 2 million bpd in the fourth quarter, according to U.S. Energy Department figures. Going to Mars. Mars generally refers to a medium sour grade of oil produced from the Mars platform, a joint venture between majority owner Shell and BP, located about 130 miles, 210 kilometers, off the coast of New Orleans. Refiners including Valero Energy Corp and Marathon have been scooping up Mars from Shell's trading unit in the weeks following the sanctions, sources familiar with the deal said. Other refiners, such as Phillips 66, were also seen buying Southern Green Canyon, SGC, a grade similar to Mars, from Shell. Trading in those grades has surged. Volumes in the Argus Sour Crude Index, ASI, a tool reflecting prices of 3 U.S. deepwater sour crudes including Mars, rose to 614,036 contracts for February, the most in nearly a year, data from price reporting agency Argus Media show. Volumes in Mars for February delivery rose to 410,536 contracts, the highest since August 2018, the data showed. Prices of other offshore grades such as Thunder Horse, Bonito, and SGC also surged to the highest in 5 years after sanctions took effect. Phillips 66 declined to comment and Valero did not respond to requests for comment. Ease of access in an auction of federal offshore leases this week, Shell submitted the most high bids for Gulf leases, winning 87 tracts of land valued at more than $84 million. BP grabbed the third most parcels, winning 23 parcels priced at more than $15 million. Shell's pipeline partnership, Shell Midstream Partners, shipped 10% more crude on the Mars system to the Gulf Coast last year. Both Shell's Talent and BP's regional president for the Gulf of Mexico and Canada Starlee Sykes each said their company is continuing to actively invest in the Gulf, where they say crude can be produced at levels that were cost competitive with that from shale formations. With several new projects slated to come online as soon as this year, U.S. refiners could replace a good deal of heavy and medium crude imports with Gulf barrels, said Sandy Fielden, Director of Commodities and Energy Research at Morningstar. Because of their proximity and ease of access to this market, Gulf producers have a natural advantage selling new output to Gulf Coast refiners, he said.